leader in teaching people how to become traders and investors.
I'm an ordinary guy. Do you think I can do this?
What do you think, I'm extraordinary or something? I mean, of course. I was just glad I signed up for their free class. It's great. They go over everything, and they'll show you all the different ways to make money in the market.
Now, what? Ask my boss for a raise. I'll just give myself one.
Come to Online Trading Academy's next free half-day class. Call 888-517-TRADE now. They'll send you a free online video course so you can get started right away. 888-517-8723 or HoustonOTA.com. 888-517-TRADE.
One more minute.
Dish TV is better than cable TV.
Yes, 1 minute.
Why? Because you can save 45% on packages compared to your high-priced cable bill. Wow. Take those giant scissors and save with Dish TV. Plus, you get a free DVR upgrade to record your favorite shows and free installation. And with Dish Anywhere, you can watch TV for free on your mobile device. Act fast. You can save hundreds of dollars. Does your cable company do that for you? I don't think so. Get all the best TV programming at your fingertips.
Morning, everyone.
Price of cable TV. So say,
dang, I'm going more and more white hair.
Goodbye to the high cable bill and save up to 45% on Dish TV packages today. These are limited time offers and can change at any time. Call fast. 800-344-2066.
Hey, good morning, Chris. Good morning, Patrick. Welcome back from the Memorial Day holiday.
That's 800-344-2066.
The following program, paid for by Right Path Real Estate, does not necessarily represent the views or opinions of the staff, management, or ownership of the station. It's time to get on the right path with Right Path Real Estate Radio with Tom Perry. Get the answer to your questions and keep you from taking action and succeeding today. Get ready. The guy that will put your fears behind you is on the air now. Taking calls at 713-785-1817. Toll free 877-881-0271. Now here's your host, Tom Perry.
Hot mics.
Hey, welcome back. Welcome back from a vacation. This is Tuesday. It is the day after Memorial Day, Tuesday, May 29th, 2018. So we can't use this as an intro on a best of show because I just dated it.
You did. Horrible.
Just ruined that. But welcome back anyway. So I know I'm joined live on the call-in hotline with Paul from Paul Tren with the Legacy team of the Hernandez team of Legacy Mutual Mortgage. Paul, welcome to the show.
Hey, Tom. How are you doing?
Doing well, thanks. How are you?
I'm doing good. I'm doing good.
Excellent. Did you have a nice, safe Memorial Day weekend?
I did. It was good. Family time, some home improvement time. Snuck that in, and it would have been better if the Rockets had won last night, but, you know,
yeah, we don't.
They had a good run.
We could spend the entire show talking about that, but this is not a sports show, right?
Right.
Yeah, I think we all have opinions about that, but, you know. So, oh well, better luck next year, right? It would have been a sweet story for the Astros to have won last year and then the Rockets to win this year, and then, but oh well, another year of hope stashed. Yeah, we had a good run. Yeah, that's the way to put it. Always put a positive spin on it, right?
Exactly.
So, what's new, if anything, in the world of home mortgages?
Well, you know, I guess the hot topic are interest rates. You know, that's usually what is something that was always brought up from our clients. You know, they're you know, a bit concerned about the economy and what it's doing with the interest rates and what we're seeing and what we're able to get for them.
Yeah. So what kind of interest rates are y'all able to get right now?
Well, right now on primary homes, you know, for just regular homeowners that want to buy their home that they're going to live in, we're seeing rates hover around 4.6 to 5%. That's usually the window where they're falling in now.
Okay.
And then for investors, it's creeping up, maybe usually you add about half a point to that. So anywhere around 5 to sometimes 5.25. So it just kind of depends on the investor, you know, what they have going on in their financial house at the time, how many properties they have, and also price of what they want to buy. So there are these different variables that kind of subject them to certain rates.
Okay. Now, just to bring some listeners up to speed, y'all are primarily a retail mortgage company, and we have a lot of investors that are listeners. And so y'all can do investment type properties, but what a lot of people may be asking is like, wait, hey, why do y'all have a radio show sponsor that's primarily a retail lender? You know, when you have listeners that are investors, and I just want to explain that what we found, you know, when we crossed the 100 house a year barrier several years ago, and we've been maintaining that for the last several years, one of the things that we realized is that the more we can control the process, when we buy a house, we close on it, we start remodeling, we make it retail ready, that we do this on a regular basis. We're averaging about a house every 3.5 days. And so because of that volume, that we want to control the process as much as possible. And one of the areas that was a bottleneck in our process was when we sold a property retail and we were dealing with, the myriad of different retail mortgage companies. So you get an offer that comes in. We would get an offer that would come in and say, hey, we're offering this price. It's either at asking price or above asking price, or sometimes a little bit below. But, there's always a pre-approval letter. There's always, other terms that are related to the offer that's coming through. And one of the things that we discovered is not all mortgage companies are created equal. So we partnered up with Jennifer Hernandez and the Legacy team to help smooth out that process, because what we discovered is they are really awesome. You guys are really awesome at, managing the process. In fact, one of the things that we require now is anytime we're accepting a retail offer is that the person be pre-approved with you guys. And that gives y'all an opportunity to earn the business about 85 or 90% of the time, because y'all have such great customer service. And what we know is that when you are the ones providing the mortgage, y'all understand our processes, you understand how to work with the title company, you understand how to work with the buyer, and then you recognize, the appraisals and when those are going to, be necessary. We've never, I can't say never, but almost never. I mean, as much as you can use a universal statement like always or never, we've nearly never ever have a delay as a result of the mortgage company not being able to perform on time. What was always frustrating before we partnered with you guys is that we get an offer, we'd have a closing date. Let's say the closing date was, June 5th. And I'm just making up a date, but assuming that that's not a Saturday or Sunday, that you get down to like the 4th, you're like, okay, we're ready to close on the 5th, and the mortgage company like, oh, well, we forgot to get the survey, or they would never actually admit that they forgot to do something. Like, oh, the survey company hadn't got it to us on time. Well, yeah, it's because you ordered it this morning. They're not supposed to. I mean, it's kind of like they miss those critical time frames of getting stuff ordered, and you guys never do that. So I want to give you contact information. It's jennifer.legacymutual.com, 713-579-3600. That's jennifer.legacymutual.com, 713-579-3600. So, Paul, I just want to say thanks. It says,
yeah, absolutely.
Raimundo Torres asking on the Book of Faces, saying, do they work in New York City or New Jersey? Are you guys licensed in...
We do not, but we do have a contact out there. I know specifically we have a contact out there in Jersey and in New York City, in Manhattan.
So it's part of Legacy Mutual Mortgage, but it wouldn't be the Hernandez team, right?
Right. No, it is. It's part of Jennifer's network. She actually has a network of mortgage lenders throughout the U.S.
Yes.
that she really trusts. So in terms of the East Coast, we do have people out there that we really like a lot. So
so Raimundo, in order to get that information, send or contact jennifer.legacymutual.com or call 713-579-3600 and ask for that referral that we talked about on the radio. Hey, good morning, Daniel. Okay, so what else do you want to talk about, Paul?
Well, I mean, I just wanted to really back up to what you were saying. We're very investor friendly. We know what to look for. We know what deadlines we're up against. We know that time is of the essence. And for you as a seller, we're working against the clock. We understand that you do not want delays, and we're there to help that process. And one of those things is just getting people pre-approved the right way. Thoroughly vet them, make sure that they get that green light or red light sometimes that they need, from us and for you and for everyone involved to either move on to the next potential buyer or work with someone that could usually get you closed on time. And, we have processes in place to do that. There's a methodology of doing things that we stick to. It's worked. It's proven itself, and that's what we go by, and like I said, we're investor friendly, and that's one of the things that not every bank or mortgage company out there is used to working with.
Here's what I recognize is that
along the way,
every single seller of a house is time sensitive, because oftentimes if it's a traditional retail buyer, you're selling your own personal residence, let's say, then timing is important. Because if you're scheduled to close on a Friday and then you got the movers coming in this weekend and you're using some of that money to close on the next house that you're buying, I mean, all those kind of things, yeah, sellers can get upset. But the difference with an investing company that's running it as a business, what most people don't realize is that there's two areas that most investors miss. If they're ever going to, reduce the amount of profit, it's primarily in two areas. One is a miscalculation of the holding cost, and the second thing is that it's a miscalculation of the rehab cost. Now, a mortgage company can't fix the rehab cost miscalculation, but a mortgage company helps a lot. Most people don't realize it every day that you hang on to a property, because let's face it, when a retail seller is selling a property, they're paying taxes, insurance, utilities, HOA, but they'd be paying for that in a place to live anyway. But when you're an investor, every day that you're paying taxes, insurance, utilities, cost of money, HOA fees, that's coming straight out of the bottom line in terms of profit. So if you've got an expectation that you're closing in 30 days and it actually pushes to 40, 45 days, something like that, that's pure profit coming straight off the bottom line. So what that means is that we typically, the shortcut that we're teaching right now is that whatever the predicted future value of the property is, some people use the term ARV, we like the predicted future value. If you've been to our weekend retreat, you understand why that is. If you've not been to our weekend retreat, you definitely need to sign up for that. But the predicted future value, let's say that you're flipping a $500,000 house. We know that the cost of holding that property is between 1 and 1.5% of the PFV of the property. So that means that your holding cost, depending on why the difference between the 1 and 1.5%, it's always the cost of money. So whatever your cost of money is, if it's like 3 and 14, it's going to be closer to that 1.5%. If it's let's say 0 and 12, it's going to be closer to that 1% of the PFV. So that on a $500,000 house, that means between $5,000 and $7,500 a month. So you divide about 30 days in a month, that's like 166, or 7,500 is 250, so it's between $166 and $250 a day. A 10-day delay can cost you between $1,700 and $2,500 straight out of profit. You multiply that times a bunch of houses in a year, and you're talking about real dollars. So a great mortgage company, and I'll put Legacy Mutual category in the category of Legacy Mutual Mortgage in the category of a great mortgage company. Jennifer.legacymutual.com. The Hernandez team, 713-579-3600. That's 713-579-3600. Paul, thanks for being on the show.
Absolutely. Thanks for having me, Tom.
Thanks, man. Hey, good morning, Curtis. Good morning, Brian.
And Ash is on the phone.
Yes. Yeah, he texted me and said, hey, what's the call-in number?
Are you expecting to close accurately on
That was a good sign. It meant he was awake.
I know, right?
I'm just playing with you, Ashley.
Senior loan officer with Legacy Mutual Mortgage. Our goal is to give our borrowers and referral partners an amazing experience during the loan process. My team believes in putting people.
I know in this business, most active folks are more likely to be up late at night than early in the morning. And not that, 9:15 super early, but
yeah.
But like over this weekend, man, I there on more than one out of the 3 days between Saturday, Sunday, and Monday, on more than one of them, I slept past 9 o'clock. I got caught up on.
Or call 713-579-3600. 3611. Again, jennifer.legacymutual.com. We can't wait to consult with you soon. NMLS 514497.
Equal Housing Opportunity Lender. NMLS 514497.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties. Whether it's a flip rehab or a rental rehab, we manage...
Hey, Daniel, no fair doing it during the show. That's not fair.
Over the last 6 years, Fast Track has completed over 700 projects, which has helped us to create our 3
He's showing off, huh?
Use a detailed scope of work so that everything
No,
gets done.
I mean like playing the app.
So it gets done right, and complete the work in a proper order. So
I'm trying to learn Spanish, and so is he. And so we've joined this little club, and so we've got this little competition going, and it's been fierce. I mean, it's been fierce to learn Spanish. Hey, you just flipped something, and it gave like an echo.
Did I?
Yep.
Hello, real estate investors. Do you need a lender that
Now it's gone.
the speed of a jet to fund your
Okay.
investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending has originated over 2,000 loans in Texas, valued at over $250 million. Jet Lending will help you evaluate your deals for free and give you feedback on value, cost of repairs, and potential loan amount. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com. Oh, and don't forget about our famous Third Wednesday Super Investor Networking Meeting. Lots of fun, lots of great real estate talk. We'll see you there.
All right, 1 minute.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes or binders. The agency for that.
That's funny, Daniel. My brother from another mother.
They know what you need and when you need it. We're here for you. Are you a rehabber, wholesaler, buy and hold, or flipper? Bundling your properties on a single policy will help save time and money. Benchmark has been in business for over 10 years, and we insure over 30,000 properties. Contact Benchmark about our exclusive investor package. Call us and let us show you what we can do for you at 281-569-4353. That's 281-569-4353.
I'm going to have to start playing during the breaks.
That's benchmarkbroker.com. That's 281-569-4353. Or online at benchmarkbroker.com.
This is Business 1110.
All right, hot mics.
Hey, welcome back. Right Path Real Estate Radio, 713-785-1817 is your call-in number if you want to ask questions. This is a call-in show. You can ask anything real estate investing related, whether buy, fix, and flip, whether it's wholesaling, whether it's buy and hold, whether it's single family, whether it's commercial. We do it all. Now, right now, we're most active on the single family side because that's where the deals are. If there were deals in commercial, we would be talking about that. But right now, no deals. So we want to buy low. We want to sell high. That's the formula. It's not that hard. So the deals are in single family. That's why we talk about it. When the deals come around where you can buy commercial low, we'll be talking about that. We'll join live now via the telephone hotline with Ashley Patten, President, CEO, Chief Founder, the Big Kahuna. What's up, man?
Not much. How you doing?
I'm doing well. Did you have a nice Memorial Day?
I had a very nice Memorial Day, and I'm so sorry. It's just everybody in the world's going the same road, the same way I am, and it's just like literally, I'm still haven't moved more than 2 miles.
Nah, that's all right, man. I'm just happy to know you're awake this hour.
Hey, me too, Doc.
Hey, you know what I know is it like I was saying during the break is that it seems like real estate investors more likely to be up late at night. I mean, because I see you at all the networking events that I'm at, and it's more likely that we're going to go till 9:30, 10, 11 o'clock at night, and it's hard to be up at 6 o'clock in the morning when you're up till 11. It's just that makes it for a rough schedule.
Well, I want to work 12 hours a day, and I'd rather work the last 12 hours instead of the first 12.
Yeah, so you're like me. You like to work a half a day every day.
That's right.
Yeah, trying.
Right. And just to say, so to me, 10 to 7 or 10 to 8 and 10 to 9, and then of course if I'm out at late night at happy hour. I mean, those are the perfect hours for me.
Yeah, absolutely. I don't disagree.
Because back when I was an associate at a law firm, I mean, before I got in the title business, I mean, I was having to get up there and make it to work at 7:30, and then bill out 60 hours a week until, I wouldn't leave the office some nights till like 9:30, 10 o'clock at night. So, these corporate attorneys, they have it rough.
Yeah, you've put in your dues, that's for sure. Hey, so I want to get back to a topic that we talked about a couple of weeks ago about being able to put a memorandum of contract on a piece of property. Okay. So explain to the listeners what exactly is a memorandum of contract.
Basically, what a memorandum of contract is letting everybody. Texas is a race notice state, so it's a race courthouse to get notice to everybody. So what you file in public records is considered to notify everybody in the world that exists. Now, in reality, not everybody looks at public records, and no one really knows how to index it, but all you have to do is record it, and it's out there and for public knowledge to see. So basically, when you file a memorandum of option, or some people call it a memorandum of contract, what you're doing is you're putting out there to the public that you have contractual rights in this particular property located. You want to use the legal description and the address, and you want to use the seller, because basically if the seller tries to sell to somebody else, essentially what you can do is you can go after the seller for breach of contract, and anybody who closes with that seller, you could probably go after them for what's known as tortious interference with contract. Now, tortious is a tort; it's a civil wrong. So whenever somebody knows about a contract and they go behind the contract in order to profit, that's where it becomes tortious interference with someone else's contract.
Okay, so how would someone actually enforce that? Because what happens when there's a title company that just ignores or misses? And is there a distinction between when a title company misses something versus when they ignore something?
Well, if they ignore something and miss something, it's probably the same thing. But a lot of times you can underwrite around it. Like, for instance, I've gotten around, probably no less than 15 memorandum of contracts just because they were done wrong. So there's a right way to do them and a wrong way to do them. But, if you do them wrong, it's, you have no one to blame but yourself. I mean, it's just there's a few things that a contract, and probably the biggest thing you don't want to do is you don't want to put, because if that's on the memorandum, you're only protected until the termination date.
Right.
And so simply spell out that you've got rights in this property. And now if a title company misses it or ignores it and they close, then what may have to be done is you have to contact the title company or file a complaint with the Texas Department of Insurance, or you might have to start the foreclosure process and saying, I've got contractual rights. Now, the biggest issue with the memorandum of option is you can't do a non-judicial foreclosure, which means you have to do a judicial foreclosure, which means you just have to file a lawsuit. But once you file a lawsuit, the title company then has a duty to defend, and a lot of times that's all they that starts the ball rolling as well.
Got it. So you can't file a foreclosure you can't do a non-judicial foreclosure. You've got to actually do a judicial foreclosure, which means you file a lawsuit I assume in the district court's office?
Correct.
Okay, so you file a judicial foreclosure in the
do that, right. Yeah, and I would say before you even do that, though, find out if the title company closed it, and then contact the title company, because a lot of times they will turn around and settle because they know your next step is to do that. And then when you file suit, they've got legal fees on top of whatever that you would charge.
Yeah, so they'd rather just pay.
And so that's right.
Yeah, and how often does a title insurance company actually pay?
Those issues they pay a good deal.
Really?
I mean, it may take about 60 to 90 days, but usually on those memorandum contracts, I mean, they will often pay because you know, because I mean, they don't really have a lot of grounds, because if you have contractual rights and that seller turns around and, you know, because when there's a breach of the contract, the presumption is it's the buyer who breached. The reason why is the seller really doesn't have a duty to perform until he gets paid or she gets paid.
Right.
And so the buyer's got to do the first performance. And so if the closing date passes without an extension, the presumption is the buyer didn't come forward with the money.
But if the buyer's ready, willing, and able to close, then and the seller's refusing to show up to title, then that's not on the buyer, right?
Well, a lot of times you may have to, if you want to really preserve your rights, sometimes you have to send the money to the title company. That shows ready, willing, and able. And I've had 3 or 4 buyers do that, because the seller, you know, may not have gone, you may have gone, and these buyers had such a sweetheart of a deal where they wanted to make sure that they locked up, and so where it couldn't come out, he said, she said.
Got it.
So they actually funded the money to the title company, and then they turned around and sued them for specific performance. And 4 out of those 5 cases I can think of, they won their specific performance. But now these were all involved, you know, non-homestead properties,
right?
Investment properties. So, I mean, judges aren't going to normally tell somebody you got to sell your family house, you got to sell where you live if they have a contract. But if it's an investment property and the investors make enough money, you know, that is an option, because all it then is just cash. Is just normally the sellers may not be a greedy person.
Well, here's what I recognize, because one of the things I want to add to what you just said, or at least ask for clarification. You said, hey, a judge is not normally going to force someone to sell their homestead property, which is true, but the judge could say that, hey, you don't have, I'm not going to make you sell it, but if you are going to sell it, you can't sell it to someone else. Based on your contract, you've got to sell it to this person.
Well, that's another thing they can do. They can turn around and they can direct them under civil contempt to do that. That's exactly right. So,
because you know that's really what the issue is typically, right? I mean, what the practical situation is rarely is it the seller is deciding not to sell to anyone. What it is that they've contracted to sell to investor A, and then investor B has come in behind them and has just ignored that there is an investor A, or doesn't know that there's an investor A, and offers more money than investor A, and so therefore the seller says, hey, I'd rather take investor B's offer because it's more money, and so I should be able to do that. But it's like, hey, I had one person tell me one time that they said, I said, yeah, you can't do that because we have a contract. And they said, well, yeah, people cancel contracts all the time. And I'm like, yeah, that's true when both parties agree to cancel the contract. But the whole purpose of the contract is so that if both parties don't agree to cancel it, then, you know, you've got the contract that says what has to happen if one person wants to enforce the rules of the contract, right?
That's right.
Otherwise, why have a contract?
You know, that's exactly right. You know, but now the problem is anytime you breach a contract, you know, it's a breach is one thing. You know, getting money from it is a whole other thing. So, you know, a contract is only as strong as the person who makes it, which means that essentially if they breach it, you have to, in litigation, and sometimes or all the time, a bad settlement is better than a good lawsuit because at least you know what you get.
Yes.
Now, when someone breaches a contract, you can either sue for equity or both, which equity means that specific performance or, you know, law is breach of contract. So you got holding costs, or for instance, if you had to do special repairs for somebody, you had to fix the house up for a buyer, and then the buyer wanted new shutters, and you know that right there forms as a breach of contract damages, because the normal seller wouldn't have wanted those specialty shutters, but this guy wanted it, and you put it in there, and that cost you $7,000, and that's part of your damages that you're going to sue for.
Okay, so you've been joined live via the call-in hotline with Ashley Patten. It's plfpc.com. That's plfpc.com. 713-621-5808, 713-621-5808 for all your real estate legal advice or closing issues on title. Give Patten Law Firm and Ashley Patten a call. That's plfpc.com, 713-621-5808. Ashley, thanks for coming in the show.
Hey, Tom, thanks for having me.
Thanks, man.
All right, bye-bye.
Mike's off.
Selecting a foundation company and their product for repair is a lot like a game of chance. You simply don't know what you're going to get. The foundation repair industry as a whole doesn't carry a license, nor is it regulated. However, Foundation Check utilizes professional engineers to review all of our files to give you the best foundation analysis in today's market. Remember to check before every repair. Call 346-702-3825, or you can reach us online at foundationcheck.com.
Are small returns getting in the way of your retirement plans? Why settle for mediocre results? There's a better place to invest. The experts agree, single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906 or visit our website, jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals.
Coming back at 9:38.
Next Gen is a group of appraisers specializing in
All right.
investment real
I'll be right back.
estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give Next Gen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Real estate investors, if you're not familiar with Quest IRA, let me tell you what you're missing. We've got free weekly educational classes, networking opportunities, and the ability to tap into trillions of dollars for your real estate investing deals. Come by our office or join us remotely as we simulcast all of our educational classes every Tuesday morning and evening. For more information, call us at 1-855-FUN-IRAs or visit our website at questira.com.
Taxes. Just the sound of that word makes people cringe. At Anderson Advisors, we provide tax reduction through asset protection for real estate investors throughout the country. Our unique philosophy has CPAs, lawyers, bookkeepers, and estate planners with one common goal, helping you, the real estate investor. Check us out today at AndersonAdvisors.com, and don't forget to tell us you heard about us at Right Path Real Estate.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes, binders, and the agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. It's there for you. Call Houston's leading real estate risk management experts. Benchmark Insurance Group of Texas, 281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com.
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com.
All right, I'm back.
Are you a realtor or
All right,
seller
30
that is
seconds.
concerned
All right.
about the new TRID rules and closing on time? I'm Jennifer Hernandez, Senior Loan Officer
look
at
at
Legacy
that.
Mutual Mortgage, and we have
Uh-huh.
mastered the 30-day close. We close on time, accurately, and with tons of communication. You'll have a dedicated team of a coordinator and a contract-to-close associate. Give me a call today at 713-579-3611, and let's talk about how we can help you on your next transaction. NMLS 514497.
This is Business 1110.
Oops. All right, here we go. Hot mics.
What is oops?
Nothing. All right, hot mics.
Hey, welcome back. Right Path Real Estate Radio, 713-785-1817. Or a lot of people join us on the Book of Faces. You can follow along. You can hear what's going on during the breaks. Or you can just listen to terrestrial radio. We're also on TuneIn. We're on iHeart. We're, people say all the time to me, they'll walk up to me at a networking event and they'll say, man, I listen to your radio show every day. that's, that sounds normal, right? But then other people come up and go, oh, man, I watch your radio show every day. And I'm like, oh, that sounds so weird, but I know what they're talking about. They're talking about they follow us on the Book of Faces. Or we also, we don't simulcast it because Facebook doesn't allow that, but we will put stuff on the radio, up on YouTube after the radio show. So you can follow us there on YouTube as well. Go to our YouTube channel like that. Hey, so we're going to have a Pathway to Income and Wealth in Real Estate workshop. It's going to be June 16th through June 17th. It's a Saturday, Sunday. It's 9 a.m. to 5 p.m. It's going to be right here in our offices, 11451 Katy Freeway. It's the first time that we've held it here in our office. It's going to be a 2-a-day event. Now, you're going to want to register in advance, and here's the reason why. We used to hold a 3-day event, and we're still teaching. The format's actually changed a bit. And so what's happened with the format, and a lot of our events are starting to sell out. For example, if you go to our website right now, you'll see that as of June 2nd, we're having a property tour. It's the Right Path Property Bus Tour. It's Saturday, June 2nd. It's from 8 a.m. to 1 p.m. It leaves from our offices. It's going to be we're going to have general contractors there. We're going to have inspectors there, insurance people there. I mean, it's all the people that would need to be on your team to help you analyze a deal. It was limited seating when we put it out there, but it's already sold out. And so here it is, just May 29th. It's this Saturday, but it's already sold out. So if you're one of those people that waits till the last minute, you're starting to get to a place where that doesn't work within Right Path. So you don't want to wait till the last minute to register for the Pathway to Income and Wealth and Real Estate workshop because it is filling up quickly. It's a 2-day event, but if you wait till the day before, what's going to happen is you're going to be behind when you show up for the first day on Saturday because we're going to assume that you've already completed day 1 before you ever showed up. It's still really a 3-day weekend retreat, but what's happened is that we've recorded a lot of the information. Like we talk about the definitions of, because, every single, industry, whether you're a brain surgeon, whether you're a teacher, whether you're an insurance person, whether you're a car guy, whatever it is, every industry has its own language. And so we used to spend about an hour and a half on day 1 going over the language that we use being a real estate investor, whether you're buy and hold, whether you're buy, fix, and flip, whether you're wholesale. But what we've done instead is we've created video training so that you can actually watch the language section that we used to hold on day 1. But we're expecting you to know that information before you show up. Otherwise, when we're starting to use terminology and you don't know what, you're gonna be behind the class because we're not going to have the time. We're going to be packing so much information in to just the 2 days. You're not going to have the time to catch up. And you're not going to be able to ask the question, hey, what do you mean by this or that? Because hey, that's all in the training video. You can go back and watch that later. The second thing that we are going to be covering on the online training is the math that it takes to be a real estate investor. What we're talking about is the 5 different costs that there are in doing a real estate deal. And you've got to know what those costs are if you're going to run this like a business. And time again, what will happen is I'll get, 1 or 2 guys will come up to me and they'll talk to me about what they're experiencing in their real estate investing. I won't call it a business because it's not being run as a business. I'll call it their real estate investing experience. Because they're gaining experience, but is it the right kind of experience? Here's what I know is that if they are not calculating all the different costs, then what ends up happening is they're doing a lot of work and they're not getting the results to show for it. I've seen so many people that have come through our weekend retreat and then have just stopped at the weekend, haven't continued on beyond the weekend. And not once have I seen one that has actually been able to achieve the level of success that their previous experience or their aptitude would say that they should be able to fulfill. In other words, they haven't been able to live up to their potential. And here's what I know is, when you're talking about achieving results at a high level, I can't think of a single area where people achieve results at a high level that don't have some kind of coach. Because left to our own devices and left to our own accountability, we typically underperform our potential. So really what the whole idea behind Right Path is to help people, one, have the knowledge. Most people, when they first start out, they have insufficient knowledge to be successful. But they also lack accountability. Most people are, I push myself really hard. Not as hard as someone else would be pushing you. I don't know about you, but if I go to the gym, if I could go by myself, I don't push myself as hard, and I don't know of anyone that does push themselves as hard as when they either go with a partner or, even better, go with a coach. Because not only is a coach going to help you from the standpoint of they're going to help you not make mistakes, right? It's not just about the money that you make. It's about also not losing money. One of the things I talk about at the weekend retreat isn't not losing money the same thing as making money? Now, you could say a little bit like golf. If you're a golfer at all, you'll understand this. My dad one time gave me this little plaque, and it said, if the goal of golf is to take the fewest strokes, then why do it at all? Because obviously then you're reducing your strokes to 0, which is the minimum number you could reduce your strokes by, right? So you could also say that by not doing any transactions, you're reducing your risk. Yeah, but you're also not gathering any gain. So what most people are able to do is calculate what the potential gain is. But what we teach is, how do you measure the amount of risk that you're assessing versus the amount of reward that you're assessing? Most people do a great job of assessing the reward, but because they don't know all the cost of doing a real estate transaction, then they don't actually ever achieve their potential. Number one mistake I see is that people miscalculate their holding cost, and then secondly, they miscalculate their construction costs. But there's a third one in there also. What they failed to do is actually calculate the amount of profit that they designed to have. But if you back up a step, what's even worse than not knowing what the costs are, the worst thing that you can have when you start your real estate investing career or business, if it's a hobby, then we won't call it a business, right? We're just going to keep the nomenclature clear. If you're starting a real estate investing business, the number one thing that you've got to focus on is, where are you trying to get to? And let me be real clear what I mean by that. When you're talking about where you're trying to get to, it's not about, well, I want to flip 5 houses this year, and then I want to flip 10 next year, and then I want to flip 15 the next year. That's not a goal. It's that, why are you picking 5 houses? What kind of lifestyle is that going to afford you? Or what kind of income or what kind of monetary amount is that going to get you to? Because it's the goal that really is going to... Because here's what happens. If you set a goal of hitting 5 houses and your goal is to make $250,000, well, then that means you have to do $50,000 per house, right? And you go, oh, wow, I never really thought about it like that. See, it's the goal of the total dollar amount that needs to align with what the activity is that's going to get you to that goal. So you first have to decide, well, do I want to have $100,000 a year worth of income? Do I want to have $50,000 a year worth of income? Do I want to have $200,000 a year? What's that income goal? And then the question becomes, do you want it to be active or do you want it to be passive? And there's a difference based on where you are life-wise. And if you can decide those things first, where you're trying to get to, and you know where you are. Now, I'll tell you the other mistake that I see is people set a goal that's unrealistic. It'd be a little bit like me setting a goal that I want to dunk 10 basketballs in a row, just without using trampolines or any kind of special effects or things like that. That's an unrealistic goal for me because I don't have the jumping or leaping ability or hand size or all those kind of things. I have physical limitations, right? I just have to accept that. But we also have limitations in terms of what's realistic, in terms of what you can equate your time, you know, what you can exchange your time for monetarily. Because if you're trying to set a goal, let's say, for example, to make $50,000 a month passively, and you've never made even $10,000 a month when you've been working your tail off 60 hours a week in a full-time job, you don't have the experience or the skill set in order to be compensated at that level yet. Now, the beauty is that you can grow your skill set. There's some things that you can work on and you can improve in. You know, you may not ever be an Olympic swimmer, right? But that doesn't mean that you can't be a world-class investor. But what it starts with is it has to start with knowledge and then action. You're listening to Right Path Real Estate Radio, 713-785-1817. We'll see you on the other side of the break.
Mike's off.
Did you know that there are over $24 trillion in retirement accounts in the U.S.? Imagine if you could use someone's IRA to fund all of your deals. Well, you can. Quest IRA is based locally here in Houston, Texas. At Quest IRA, we offer retirement accounts that can be used to invest in real estate, promissory notes, private entities, and much more. Many of our clients loan money from their IRAs to fund real estate deals all over the country. We don't sell any investments or give advice. However, we do hold free networking events, weekly educational classes, and free consultations with an IRA specialist. For more information, visit our website at questira.com or call us at 1-855-FUN-IRAs. To tap into the $24 trillion in retirement accounts in the U.S., call Quest IRA at 1-855-FUN-IRAs or go to our website, questira.com.
Hi, Clint Coons here, attorney and avid real estate investor. You know the greatest mistake real estate investors make is not understanding the potential liability that exists from owning real estate. At Anderson Business, Legal, and Tax Advisors, we specialize in protecting real estate investors in all 50 states. In addition to structuring your business for optimum protection, we provide guidance so you pay the least amount of taxes available under the law. We have 150 employees that range from lawyers to CPAs to estate planners and much more. Download our free ebook, The Invisible Investor Strategy, today at AndersonAdvisors.com or call for a free risk reduction analysis and financial blueprint at 800-706-4741. Anderson Business Advisors will help you keep more of what you earn. Call us today at 800-706-4741 and mention Right Path Real Estate.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give NextGen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Do you have cracks in your brick, doors that stick, or sheetrock that's coming apart? Then you may have foundation movement. Due to our expansive soils in the Houston area, it's probably not a question of if you have movement, but when. Call Foundation Check for a truly independent, unbiased foundation evaluation. Foundation Check has been in business since 2009 and has completed over 1,400 evaluations. We're not in the business of repairing foundations or selling you unnecessary pier work, but we are in the business of evaluating your foundation. Our product is designed for house flippers, landlords, or even owner-occupied properties. Each of our files is reviewed by a licensed engineer. Remember to check before ever repair. Call 346-702-3825. That's 346-702-3825. Or you can reach us online at foundationcheck.com. That's foundationcheck.com.
Are small returns getting in the way of your retirement plans? Why settle for mediocre results? There's a better place to invest. The experts agree, single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906 or visit our website, jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
This is Business 1110.
All right, hot mics.
Hey, welcome back. Right Path Real Estate Radio, 713-785-1817. Hey, what I want to tell you is, you may not realize this, but if your goal is retirement, most people don't realize that there's a number that it takes for you to be able to retire with the amount of income that you want to have. In other words, if you say, hey, Tom, I want to be able to have $5,000 a month of income coming in, not counting Social Security or any of the other stuff, and I want to be able to retire by this amount of time, most people don't know what the number it is that you need to have invested at whatever the interest rate is in order to be able to satisfy that. And if you did the math, it's very discouraging for most people. However, when you start looking at real estate as an investment vehicle, the thing that makes me excited is the amount of returns that you can get in real estate with relatively little risk. For example, we're experiencing about a 7% rate of inflation in the area of housing in houses below, like rental properties that are below $200,000. There's a variety of different factors as to why. If you want to learn more about this, you need to go to rightpathrealestate.com, register for our next weekend event, because what we're going to be talking about is how you can actively make money in real estate through buy, fix, and flip, through wholesaling. We're going to be teaching that. That'll be our class on Saturday. And then continuing on, Sunday is going to be how you can do buy, fix, and flip, how you can do wholesaling, and it's not wholesale, how you can do buy, fix, and flip, and how you can do buy and hold passively.
2 minutes.
Yes, you can do both of those passively. And we're going to be teaching you how to do that. So imagine if you could be able to put $15,000, $20,000 of extra money without ever going to look at the property when you're flipping a house, because you've got the right team in place, someone to help you find the deal, someone to help you fund the deal, someone to help you analyze the deal, and then you put a little bit of money into the deal, and you end up making $10,000, $15,000, $20,000 or more flipping a house. Now, if you were doing it actively, you can make even more than that. We've had students that have made, 6 figures on a single flip deal, and several that have made just under that, more than $80,000 on a single flip deal. That's possible if you're doing it actively. But imagine being able to make $10,000, $15,000, $20,000 from a flip passively. But even more importantly is when you start talking about buy and hold properties, and you can call me up tomorrow when Jason and I are on the radio together.
1 minute.
And we can talk about the pros and cons of single-family real estate for buy and hold. Because when you're talking about the kind of returns that you can get, you may not realize that you're within 3 to 5 years from being able to retire from wherever you are right now. If you've got some savings set aside, you're 3 to 5 years from retirement. And I don't care if you're 25 years old or you're 35 or you're 40, 45, 50, whatever that number is, you can do it. All you got to do is go to rightpathrealestate.com, register for our next weekend event, and you could be executing a plan that gets you well on your way to retirement in less time than you think. Guys, thanks for listening. Jason will be back fresh from vacation. He comes in tonight. We will be live in the studio tomorrow. That's on Wednesday. Hope you had a safe and happy Memorial Day, and we'll look forward to talking to you in the studio tomorrow.
All right, have a good one.
Thanks.